Good day, all. Ira Epstein with your financial wrap-up for this Thursday, the 15th of August, 2019. And before the boards disappear, and they're going to go magically gone on me, you can see how the markets finished up in the stock indices. You're up a little bit in the gold and the dollar. Bonds and note futures, well, they were sharply higher, too, as energy prices still get weighed on, as world trade isn't picking up. And in the grains, it's just a rotation where corn stabilized and the bean market and wheat down a little bit. So as we take a look at where the market's at, for the week so far, we're down in the S&P 71 points. So it's been a heck of a ride as the markets come down. The volatility is unbelievable. And, you know, yesterday I offered that course that we had created for you to learn on pivot points. I hope you got it yesterday from us if you requested it and you used it. Today's one of those days where it came in because you were moving so much up and down within the ranges today. It was offering quite a bit of excitement. I have this circle here because, you know, what we did is we had, if you'll remember, an outside day up, and that was on Tuesday. We took that low out, and today we made the lowest low of the break. So you caught a group of people in here. You've dropped the market down. The question that I've had as this has been occurring is, can the market get down to key moving averages or Bollinger Bands to find support level again? We'll get to that in a minute. In terms of the swing line, you're back in the downtrend with this pattern today. Lower highs, lower lows. Okay. Then I look at where the market is, and it's under the 18-day average, so the bias is down. We tried today to make a run at the 200-day moving average of closes, the way we did here. The market failed to do it. Doesn't mean it doesn't have some time to do that, but it was a failure to make on that straight down move that it was having. It also failed to hit the lower Bollinger Band where the two were together here. So rallies, if they do come in, maybe back to the 100-day average. If you gave up there, maybe the 18. And on breaks, the support, I think, is being defined down to the 28.0607 level, where at the end of the week, I don't know that the market will be real crazy tomorrow or not, trying to get there and a lot lower. That's all I can say. When you take a look at the momentum, it's pointing down. So I've got the bias down, the trend down, and I have some numbers here at the 28.0607 level that make some sense for support. You made a lower low after breaking through the circled area again of this break, and today you came back a little bit, closed about 7 higher. Again, I would have loved to have seen this challenge right here to get an idea, is the market able to hold those numbers and stay contained? Otherwise, you've got the combination of resistance from the 100-day average up to the 18-day. In the Dow, you did what I wanted. So the Dow made its run for the lower number, came back, and notice, if you take a look at where the 200-day moving average is, it comes in at 25,626. You closed about 50 points lower than it, but literally, you weren't able to stay down there. Remember, it's a zone that you're looking for. So I'll call this now a market that's in that 200-day, looking to see, is it going to plow through again on the downside, or is this enough with higher lows on the assault of that? In the Russell, the number had to be the Bollinger Band. It can't be the 200, the 18, or the 100. They're all the way up here. This market's longer term much more bearish. And I wouldn't have thought that when all these interest rate cuts were coming, that the Russell would be the weakest of these indices looking, because most of these companies aren't international companies. And the domestic economy is, any way you cut it, strong. I mean, did it slow down a little? Yeah, but the retail, if you saw today's numbers, the retail people are out there. In other words, not the retailers that are selling it, but the consumer. The U.S. consumer is still buying. It's what he's buying and how he's buying that's different. That's why you get companies like Macy's that are still in trouble, and other retailers, they have to change their brick and mortar ways and address whatever they have to address. If I had the answer, I'd be the richest guy in the world, so that they can solve what Amazon's done to them. But in any case, still in a downtrend, but oversold. In the VIX, staying up here tells you you've got volatility. Being down here is where the market gets complacent. So if you continue with the VIX going even higher, you're going to get more volatility in the market. Now I see the resistance coming in at 24.60, if you'll remember. We had traders that the first breakout here got caught, in my opinion. They had one swoop back into this zone to just try to call it a day, and I had mentioned in the videos, I said, they got to be careful. This 18-day average is going to keep moving up on them the way that the breakout occurred, and that's what's happened. So you've carried this market up each day a little bit more, and it's going on average now, I don't know, anywhere between 20 to 30 points if you look at it. And it's like letting that get away from you. So I think they got out and they called that a loss. Will they reestablish calls, selling calls, at the first challenge of this upper Bollinger Band again? Well, that's going to be the interesting thing. In the T-bond market, you just keep with the embedded reading, and that means you're not even getting a break. Do you realize you haven't had a lower low day in over a week and a half now? This market just each day continues to grind higher. When you come to the 10-year note, you'd see it on the swing lines. You're not getting and staying down. What we had was an outside day down right here, and that's why I've got it circled. If you take that day's high out and the day after it's made, or the day after that, next 2 days, you took it out yesterday. Then the market, in theory, puts in the closest of a moving average, and they're all under the market, or the upper Bollinger Band. It's the Bollinger Band that I'm looking for, obviously. When you take a look at TLT, just staying right on up and not even backing off, look at what happens when you get an embedded reading. You know, when I say that, look at what happens. I was thinking of Skyfall. Remember that James Bond? And the character, the villain in it, oh my God, he was great. And he says, look at what you made me do. And it's strange, but that's what happens with the embedded reading. Look what you made it do. It runs. As we take a look at the dollar index, lower low, higher high, I call this noise. Sort of caught between the two Bollinger Bands that it's refusing to hit, but just whipping. And as I said, so far, it hasn't followed through much. This is the first time in this pattern that you got a day that followed through after a breakout type of day. It's to the upside. Will it get to the upper Bollinger Band? But the currency markets have certainly not been a friendly market to a lot of people. And you're getting the flip-flop of that, a second day of follow-through on the euro. I understand the euro breakdown because I'm reading these reports as to where now one of the senior people at the European Central Bank, I think it's Mr. Rehn from Norway, and he is very influential. And he is talking that the bank is considering in a major way cutting of interest rates, putting back in the quantitative easing of 50 billion euro a month, talking of another tiered system of loaning so banks can put money out into the economy, and maybe letting banks buy equities. Yeah, equities. So similar to what Japan has done. So what you've got here is that could all be bearish to market, kick the dollar up for the short term. In the British pound, you were up 49 points today. I understand there's a lot going on. Jeremy Corbyn trying to get other PMs to oust Prime Minister Johnson. That doesn't look like it's going very far. And we still have the story of what? The embedded reading. Now, as long as it stays embedded, I'm comfortable. Intraday, when the market was near today's highs, it had lost the embedded reading. It gained it all back, plus on that, obviously, but it's a warning sign. I just watched it and I said, okay, I don't want to see new highs in the market made if one is short. Didn't do it, came back down. In the last trades today, we were closer to 120, 120. In the end, you have a pattern of lower highs, lower lows. That's bearish. This market was a safe haven buy. It's not running right now as we continue to make lower all-time lows in the 30-year bond. Are you aware it's 191 and a fraction today? 154 in the 10-year. I mean, these are big numbers, but you're not getting the panic in there. You're getting support on the breaks. You're staying over the 18-day average, so the bias is up and you are overbought. In Bitcoin, I don't know that you'll run to the lower Bollinger Band. What I do say today, you didn't see the safe haven buying coming in. Do we have a pattern of lower highs, lower lows? Certainly looks like we're getting that. In the WTI and Brent crude, you had a one-day bounce. Look at how much you've given back. The differential's back to 381. Remember, I told you that I was looking, and the IEA had predicted that the market, and maybe the EIA did it too, that the differential was only going to be about $4 or $5 in the latter part of this year, and Boy, they were right. When we take a look here at the Brent, the low today was 57.69. So you took out this break low. So actually, I have this in the wrong place. I should have an arrow pointing down. Notice that the first challenge of the 18-day average, that line in the sand, stalled the market out. This is what you call a contra-trend rally, stalled right where it should, the 18-day average, and in 2 days given back a chunk. I think you can say the same thing about the Brent. Got up and through the 18-day, thrown back yesterday and staying under it today. You've stepped out of trends in these markets. Now they're just sort of drifting around. October gasoline, today's low 149.73, took this low out. So I got that one right. The high should be a lower low and a higher high, no trend. And in nat gas, a draw today. You had a pull down in the stocks, the market cheered it on, and you ended the downtrend. Well, you ended it, to be honest, way back here. And that's when you hit this number, and ever since then, you're just sort of drifting. Resistance up at the upper Bollinger Band. Today was a day, you heard me say it at the beginning of this, where pivot points are a tool that I think a lot of traders look at. I was watching CNBC today, and Mr. Nigerian and the boys all talking about volatility, and he said it the right way. He said, as long as that VIX is 24.25, he's not going to be surprised to see it try to gallop a little higher, create the volatility. And that's what pivot points use. They're looking for intraday spikes to the downside or the upside. You try to time it with oscillators of timing. I use the slow stochastic even on a 15-minute chart, and you put together what might be a day trade plan for you. This is not for position traders. This is using those new micro stock indices that are 1/10 the size of the regular contract. We charge as little as, I think, in the neighborhood of $1 round turn commission on it. It's made for pivot points. I'm not saying they'll work or not work, but you get that, you get the low commissions, away you go. If you need more information, you can always call my staff. They'll work with you on it. You can go to our website, and under our free offer section, click this on, go to the pivot points, click it off as one of the things you want. We'll get it to you by email. I'm Ira Epstein. You have a good day.